I think let's begin.
Okay, sir. Um, Good afternoon, everyone. With the permission of Principal ADG, sir, we'll begin today's webinar. The Directorate General of Taxpayer Services, Mumbai, welcomes all the officers and participants to today's webinar on the topic, Important Features of Works Contract in GST. As many of you who are practitioners or who are part of the trade are well aware that works contract is an important and also very contested topic with respect to earlier service tax and today in GST. I take this opportunity to welcome our Principal ADG of DGTS, Mumbai Zonal Unit, Shri Sanjay Rathi sir, who is an IRS officer of the 1991 batch. Sir, I request you to please deliver the welcome address and start the webinar.
I hope I am audible. Am I?
Yes, sir. You're audible, sir.
A very good afternoon to one and all. Distinguished members of the trade, CAC Sri Kishore B. Rathi, past President and Head of Indirect Tax, Marathwada Association of Small Scale Industries and Agriculture, that is MASIA, and Shri Jimmy Malaikal, Vice President, Chamber of Associations of Maharashtra Industries and Trade, AMIT. Dear colleagues and all the participants, I stand privileged and honored to extend a warm welcome to this webinar. I intensely appreciate the support and cooperation extended by MASIA and CAMIT. These associations have played a pivotal role in accelerating the growth of industries in India, accelerated genuine grievances at the appropriate level, thereby enabling the government to address and redress the problems in the right perspective. The role of these associations in stimulating, shaping, and scaling up Indian economy is without dispute. I would like to mention that the DGTS, that is the Directorate General of Taxpayer Services, is set up at New Delhi with 6 zonal units. The Mumbai Zonal Unit caters to the whole of Maharashtra and Goa. The Directorate is set up with a mandate to reach up to the taxpayers, to create awareness about the change in laws, rules and procedures, and clarify the doubts arising in following the new procedures. It is the constant endeavor of DGTS to bring in current and relevant topics to the trade and taxpayers, thereby facilitating the trade in enriching the knowledge, enabling the trade to become aware of the change in procedures, which in turn enhances the tax compliance. Several need-based webinars have been conducted in the past by the Mumbai Zonal Unit by taking inputs from the trade and taxpayers. And today's webinar is on one such important topic, that is important features of works contract in GST. Works contract is essentially a contract of service, which may also involve supply of goods in execution of the contract. It is basically a composite supply of both goods and services, with the service element being dominant in the contract between the two parties. Under GST law, the definition of works contract has been restricted to any work undertaken for a immovable property. The works contract has been defined in section 2 within bracket 119 of CGST Act 2017 as works contract means a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, or commissioning of any immovable property wherein transfer of property in goods is involved in execution of such contract. Thus, from the above it can be seen that the term works contract has been restricted to contract for building, construction, fabrication, etc. of any immovable property only. In this regard, a comprehensive presentation will be made by Shri R. Srivatsan, Assistant Director of the National Academy of Customs, Indirect Taxes and Narcotics, that is NASIN, Chennai. He is a consistent contributor for various discussion forums on indirect taxation matters in the cyber world, and is a prolific writer in reputed tax journals and has published more than 300 articles. He is an impaneled visiting faculty at various Government of India training institutes as well as ICAI, ICMAI and ICSI. He has wide knowledge on the topic. The sessions will certainly be fruitful. I request all the participants to make the best use of this session. With these words, I welcome you all to this webinar. Over to you, Joseph.
Thank you, sir, for your encouraging address and a brief overview on the topic. Now I take this opportunity to
Mr. Rathi, sir.
Yes, sir.
Okay. Because there is some problem at your end.
now I take this opportunity
My
to
voice is.
introduce
Mr. Kishore Rathi, sir. Mr. Kishore Rathi.
Now, my voice is audible.
Your voice is audible. Please keep your audio off because sir is moderating, no? Yes, sir.
Now I take this opportunity to introduce today's trade panelists, Chartered Accountant Kishore B. Rathi, who is a past president and head of the indirect taxes.
व्हिडिओची परमिशन नाहीये.
Hello.
Yes.
Good afternoon, sir. Whether my voice is audible now?
Yes, you are audible, sir.
Very good afternoon to one and all. First of all, sorry, due to some technical issue, my video is not able to getting on. Yeah. The Director General of Taxpayer, Mumbai Zonal Unit, Honorable Sanjay Rathi sir, Shri Srivastav sir, Sanjay Kumar sir, Jimmy sir, other attendants. I first of all welcome everyone. First, I will give a brief introduction of our Masia Industrial Association. Masia Industrial Association is one of the oldest association and largest association representing MSME. We are having around 1250 plus members, all belong to MSME. And as by myself, I have done the education of chartered accountant. I am looking towards this indirect tax, direct tax, other activities of particularly Masia. We appreciate all the different webinars, seminars being undertaken by Mumbai Zonal Unit at frequent interval level to clarify about the new tax laws, to clarify about the GST, taking different initiatives. This time, the very important features of works contracts on GST, the seminar being undertaken this time by Mumbai Zonal Unit. Sir, as in under the Masia, most of the members they are belong to the manufacturing industry. So very few members of Masia they are going under this works contract in GST. We have witnessed different issues when there was a VAT and service tax regime, particularly what the tax glitches everyone used to face under this for the works contract act. But with the introduction of GST, now our members or the different taxpayers they are able to easily able to do the business very well with this clarity in the law. As we being association, only thing is that sir, recently from the year 21-22, a new that tax from 12% to 18%, even for affordable housing. So as a association, our request, as all the other dignitaries have been sitting, our request is only that tax amount, tax rate should be considered very properly, sir. It should not go above 5% or 10% to make the tax parlance easily affordable for all the, as if we look towards the central government, they are focusing more and more towards the housing sector. So to push up this sector, if the tax rate is being under the control or if it is been affordable for others, so I think it will be easier and it will be affordable for affordable housing too. So this I can present from my side, and I will be eager to hear about the other features of this work contract to understand. Thank you, sir.
Thank you, Mr. Rathi, for that insightful address regarding issues faced by the small scale industries. Now I request our second trade panelist, Shri Jimmy Malayakal, who is the Vice President, Chamber of Association of Maharashtra Industries and Trade, to address the participants.
Thank you everyone for inviting our federation for this presentation on works contract tax. Like what the representative of Marcia said, most of our members are from industries and trade, and they're not from the builder lobby, but definitely some part of information can be passed on to the colleagues that we know. And since it's an immovable property, it's mostly restricted to construction. And our federation is dealing with manufacturers and traders. But surely this information will be useful and will definitely pass to whoever members who are connected to this fraternity. Thank you very much for having us over. And on a short, our federation is basically helping our members out who are spread all over Maharashtra. Like Masya, we do have our own members spread all over Maharashtra, and we help them when it comes to policy matters and various other issues with the government. From time to time, we stand by them and we give a representation to the government. I fully stand with the representative of Masya, who did take up this issue of high taxation rate, and I know this is not the right platform to pursue this, but if you do get the opportunity, please do put in a word that it will be helpful from all quarters if there's a support when it comes to lowering the taxes. Thank you very much.
Thank you, Mr. Maliakul, for sharing your thoughts on the topic. Now, I introduce our speaker for today's webinar, Shri R. Srivatsan, IRS, Assistant Director, National Academy of Customs, Indirect Taxes and Narcotics, Zonal Training Institute, Chennai. Shri Srivatsan holds a post-graduation in physics from Madras University, a degree in electronics and telecommunication engineering from Institution of Engineers, Kolkata, and a postgraduate diploma in public administration from Anna University, Chennai. He is also trained in financial intelligence and investigation, cyber tax crimes 2018 by IIM Bangalore. He is a consistent contributor, as Sir has already mentioned, for various discussion forums on indirect taxation matters in the cyber world, and a prolific writer. He is an impaneled visiting faculty at various Government of India training institutes. I think I'd like to add this unique information that he's also one of the very few officers in the department to win all three highest prestigious awards at zonal and national level. He's been awarded the Best Officer Award in 1999 at Chennai Central Excise Zonal level. He's a recipient of the esteemed CBEC Chairman's Commendation Certificate in 2016 at national level. And he's also the recipient of the coveted and most prestigious Presidential Award for Meritorious and Specially Distinguished Record of Service for the year 2019. I now request Shri R. Srivatsan to please present his, to share his thoughts on the topic.
Thank you, sir. Thank you very much for that passionate introduction about me. But let me at the outset, first of all, thank the Principal Additional Director General, Directorate of Taxpayer Services, Mumbai, for having given me this opportunity. I also thank the Additional Director General, Nasan Chennai, for having guided me in preparing this content for this webinar. I made a PowerPoint presentation so that it is visually attractive. I will share the PowerPoint presentation now so that people can follow what I speak, and they can also at the same time see what is being spoken. So I hope the PPT is visible. One line of confirmation.
Visible.
Yes, sir. Thank you. So the topic that has been given to me today is to analyze the impact of GST on works contract service. More than an analysis of the impact, I thought I will first of all begin with the essence of the works contract, which was wonderfully summarized by the Additional Director General during his inaugural speech. So the webinar precisely will be on how this works contract helped in streamlining taxation in the construction industry and then the realty sector. Perceivably both were in fact very complex services. So this will be the presentation plan for today. Probably I'll take about 30 to 45 minutes to make this presentation, so that I cover almost every important nuances with reference to works contract, and also the real estate sector, that is the construction industry, I will speak about the taxability, the exemptions that are available, the input tax credit that is available, and then the input tax credit that is blocked. There are certain specific documents that are required to be maintained by those taxpayers who supply this works contract services. I'll try to explain what are the documents that are required to be maintained. I'll also be speaking about the rate that is specifically given for the real estate sector. And in fact, it was mentioned about the affordable housing and non-affordable housing, which means there is some amount of knowledge on this subject. So I'll be essentially, trying to distinguish between what is an affordable housing and what is a non-affordable housing, and how the rates of taxes are applicable for those two types of constructions areas. So this is how the presentation plan will be today. So why we generally feel like this works contract is a very, very complex subject is precisely because of the difficulties that we faced pre-GST scenario, which in fact has been solved after the introduction of GST. So the taxation of works contract under pre-GST regime, in fact, was characterized by a fragmented tax structure, in the sense that, as everyone knows, works contract in fact encompasses both supply of goods and the supply of services. And with reference to supply of goods, or sale of goods as we call it in the pre-GST era, the sale of goods was the domain of the state government, and taxability with reference to supply of services was with the center. So we had two different separate tax liabilities that are imposed by central government and state government for the same activity. The compliance requirements were different for service that was with center, and the compliance requirements for the sale of goods was with the state. So there were always a lot of confusion, what procedure to be adopted, what are the compliance obligations to be fulfilled, what is the who is the proper person to decide how much tax is to be paid for goods and how much tax is to be paid for services. So in this confusion, there are a lot of litigations with reference to this sector of works contract services. However, after introduction of GST, now that we have a unified tax regime for both goods and services, and also after the amendment to the Constitution by introduction of Article 246A, where concurrent jurisdiction has been given to both center and the state officials, we have a unified tax regime for goods and services. It has simplified the compliance obligations. It has reduced the cascading effect of tax on taxes, because whatever was imposed as sales tax included the excise duty, service tax portion also earlier. And now there is no conflict basically between the interest of the central government and the state government legislations, because now we have concurrent jurisdiction to tax the same taxable event both by center as well as the state. So this is precisely why works contract is always seen in the prism of difficulty. We always see that it is a very complex service to comprehend and understand, but those were all the perceptions that were in the pre-GST regime. But after introduction of GST, I think everything has now slipped to the oblivion, and we have a better mechanism to tax this works contract services. In fact, during the inaugural speech, the Principal Additional Director General gave the synopsis of the definition of the works contract. Let me try to decode the definition of works contract. Works contract has been defined under subsection 119 of section 2 of the CGST Act. It basically says the essential ingredients of the definition is that works contract precisely is a enforceable agreement by law. So that is how we should understand what contract is. Contract has to be either written or it can be oral also, but the essence of the word definition of contract is that it should be enforceable by law. So a works contract is a contract for building, construction, fabrication, and there are 14 elements specified in the definition of works contract, and any person who involves in the activity of any of these 14 specified items, and which is with reference to an immovable property, wherein the transfer of property in goods is involved, it is treated as execution of works contract. So when you attempt to read the definition, probably it might be a little confusing because of the jargons used. So what I thought is to simplify the essence and essential ingredient of the definition of works contract. So works contract basically is applicable, number one, for composite contracts which involves supply of goods and also supply of services. And the supply of services should be the 14 specified services that are part of the definition under section 2 subsection 119, and it shall be in relation to immovable properties only. So these three aspects in this definition are quite important. It has to be a composite contract. It has to be only with reference to the 14 specified supplies, and no, it shall be in relation to immovable properties. If all these conditions are satisfied and there is an enforceable agreement under law between the supplier and the recipient, then it is treated as works contract. So this is how, basically you will have to understand about what works contract is all about. What are the impacting sections in the CGST Act with reference to works contract? So first of all, the difficulty lies in addressing the fact whether the supply which is with reference to works contract is supply of goods or supply of services. In terms of para or in terms of clause 6A of schedule 2 of the CGST Act, the supply of works contract is treated as supply of services, and even if the value of the goods in the supply of works contract is exponentially high in comparison with the value attributable to the supply of services, still it is treated only as works supply of services in terms of clause 6A of schedule 2. And no, it is relatable to immovable properties, and therefore we cannot escape showering our attention on clause 5B of schedule 2, which speaks about construction services also. So as it was rightly said during the inaugural speech by the Principal Additional Director General, it always, the works contract always tends to relate itself to immovable properties, and therefore real estate sector in the construction of immovable properties. So that is the predominant part of the works contract services. So construction services is also coexists whenever somebody speaks about works contract services. So notification 11 of 2017 fixes the rate for various activities under the works contract services. Serial number 1 to 3 speaks about that. I will give a detailed information about what serial number 1 to 3 actually speak about, what are the various rates of tax applicable with reference to works contract and when they are applicable. Is there any condition that is associated with that? We will see about that in the subsequent slides. We also have certain exemptions with reference to this works contract services. Notification 12 of 2017, serial number 10 and 11 actually speaks about that. The unique part of works contract services is the provision that has been given under clause C of section 17(5) of the CGST Act, which speaks about blocked credits. This apparently is a very unwelcomed subject as far as the taxpayers are concerned, because the entire provision of section 17(5), which is called blocked credit, is applicable on works contract as well as construction services, and therefore any tax that is paid as a supply of service of works contract or supply of service of construction services generally gets blocked in the hands of the recipient. So he will not be able to avail the benefits of input tax credit across the supply chain. But there are certain situations and scenarios in which this input tax credit has been made available. We will see such scenarios in the subsequent slide. But 17(5) clause C is an impactful section when it comes to works contract and the construction services. We also have one more notification, 15 of 2017, where there is a specific moratorium that no refund shall be given on excess input tax credit which remains unutilized, unlike the other ITC refunds that are eligible in case they are unutilizable, in case they are exports, or no inverted duty structure is there and the input tax credit becomes unutilizable. But when it is with reference to these works contract services, then no refund of excess ITC that is available in the electronic credit ledger will be admissible as refund. Right. So generally, works contract services can be seen as two parts. One is a divisible works contract. The other one is indivisible works contract. Generally, works contract should not be divided. But when the supplier and the recipient are capable of identifying the value attributable to goods and value attributable to services, then it is treated as divisible works contract, and they are treated as two individual supplies. And in fact, Article 366(29)(a) of the Constitution specifically imposes a moratorium that whenever you treat a contract as a works contract, you should not attempt to artificially vivisect the value attributable to goods and value attributable to services. So this is an aberration in the sense that works contract, if you treat something as a works contract, you must never attempt to divide that. But still some contracts are divisible where the value can be identified and it becomes an individual supply. And as far as GST is concerned, works contract is always attributable to immovable properties. So if it is an indivisible works contract, again, no, it becomes a composite supply. And composite supply, you know that there are more than supply of one goods or services which are naturally bundled, and they happen concurrently together, and one becomes a principal supply, and the rate of tax applicable to the principal supply becomes the rate of tax for the whole works contract or a composite supply. So that is how it is called. But when the same composite supply is applicable to immovable property, it becomes a works contract. So that is how now we have to understand the flow about this the concept of works contract. So divisible, it becomes individual supply. When contract becomes indivisible and it is not attributable to immovable property, it becomes composite supply. And when it is with reference to immovable property, the composite supply becomes works contract services, and the provisions of works contract service will apply for them. So this is the broad understanding that we should have as far as works contract service is concerned. I'm just trying to show you the authority which I was actually mentioning, that the clause 6A and clause 5B of Schedule 2 of the CGST Act, which speaks about the fact that works contract is always treated as supply of service, and the construction is again treated as supply of service. So these things are available in Schedule 2 of the CGST Act. So I don't intend to parrot that again. So one can go there and see. So specifically, it says that works contract by definition is with reference to immovable properties and is only with reference to 14 specified services under the definition of works contract, section 2, subsection 119. So this is precisely what Schedule 2 in the respective clauses also speak about. Now let us have a holistic understanding of this works contract. So works contract, as I said, which involves civil construction or construction of an immovable property, supply after completion of the construction, it becomes sale of immovable property. Obviously, sale of immovable property is outside the ambit of GST, because the definition of goods is restricted only to movable property. When it is sale of immovable property, it is outside the ambit of GST, and therefore supply made after completion of the construction, it is outside the ambit of GST. But when supply is made before completion of the construction, it is supply of service, either as construction service or as a works contract service. It is leviable for GST. And which does not involve civil construction, it becomes a composite supply. And supply before or after completion of work doesn't matter here, because it does not involve civil construction. So it is still treated as supply of service, and GST is leviable on that. So this is how the works contract service in fact has to be understood. When it is liable for GST, when it is not liable for GST is the complete understanding that we should have after going through this flow chart. Right. So what difficulty that has been absorbed after introduction of GST? Pre-GST works contract involved both movable and immovable property, and there were disputes between center and state government. But after introduction of GST, post-GST, works contract is relatable only to immovable property. It is not relatable to movable property. So that is the basic distinction that we have brought in pre-GST and post-GST, and in fact that has solved a lot of litigations with reference to taxability of this service. Right, now that we have understood that works contract is supply of service, it is a taxable service, and now we need to know what is the SAC code associated with that. The major SAC code is 995. We know that SAC is generally is 5-digit or 6-digit code, which will have to be declared in every invoices. So SAC code, whenever it starts with 99, it means that it is supply of service, and when it is 995, it is relatable to construction services, which includes works contract services also. So what I have done is, in fact, I have given 7 categories of supplies that are associated with construction and works contract services. That starts with 99.5 and goes on to 99.5, 1, 2, 3, 4, 5, 6, and 7. So this is how the SAC code with reference to the works contract services will have to be classified. Right. I feel that this is a very important slide as far as today's presentation is concerned, because this gives the backbone of the rate structure with reference to works contract. So notification 11 of 2017, which was amended from time to time whenever a requirement was there, in fact has brought a lot of clarity with reference to the rate of taxes that are associated with this works contract service. Basically, we have 4 rate of taxes with reference to works contract. The first is with reference to construction of residential complexes, which is affordable, unaffordable. So 1%, 5%. So 1% rate of tax is there, 5% rate of tax is there. Generally, the works contract services attracts 12%, and the third rate of tax is with reference to commercial properties, which sometimes attracts 18% to GST also. So these are the 4 rates of taxes that are associated with works contract services. And if it is with reference to real estate as a promoter, for affordable housing, it is 1%. For unaffordable housing, it is 5%. I'll talk to you about what is affordable residential construction and unaffordable residential construction. All those aspects I will discuss when I come to discussing about the real estate sector. Now, with reference to the works contract sector, generally, as I said, it attracts 12%. And when it is relatable to historical monuments, canal, dam, or pipeline, or structures used for other than commerce or business, if it is with reference to educational, clinical, cultural establishment, or employee quarters, or whenever the works contract consists the value which is 75% for earthwork, then all these get covered under this 12% bracket. But whenever the value of the works contract in which 75% of the work consists of earthwork, the rate of tax instead of 12% applicable will be 5%. And anything which is in relation to oil exploration, laying of pipelines, etc., also will attract 12%. And any subcontract that is given to a person who is executing a works contract, original works contract, will also attract 12%, especially in these bracketed areas where I have given here. In this bracketed area, whenever it is given as subcontract, then it attracts 12%. In all other cases, it attracts 18%. The subcontractor will attract 18%. So 12% is applicable only for the works contract services that are in relation to this. Otherwise, works contract with reference to road, tunnel, or road transport for use of general public, civil structure, and Prime Minister's PMAY schemes, Prime Minister Awas Yojana, pollution control, effluent treatment plant, cemetery, etc., they will all attract 12%. And the balance like railways, metros, single residential unit, and post-harvest storage infra also will attract 12%. So this is how we will have to understand the workflow with reference to rate structure. One more aspect which I would like to invite your attention at present, but later we'll describe in detail, is about the amount of tax that is payable on the development rights that are received by the developer from the landlords. So it attracts 18% in terms of notification 4 of 2018. So that also we will see when we look at the real estate sector separately. Right. What are the challenges that a person who supplies works contract actually faces? The problem is that he may be a multi-state, a business entity having a multi-state business footprint. He may be having his principal place of business in one state, but the entire team, which sits as far as planning, scheduling, execution, coordination, and maybe his vendors are in a different state. And it is always with reference to an immovable property. Works contract is an immovable property, and therefore no place of supply is the location of the immovable property. That also becomes a little bit of a difficulty. Works contract service, probably the outward supply and the inward supplies are all centralized billings. So it might be very difficult for him to manage sitting in principal place of business, and then the activities are undertaken in an immovable property which is located in a place outside the state where he has registered. There will also be clash on input tax credit, that is the SGST portion, which is available for him in one state, cannot be used for an outward supply in another state when it involves an intrastate transaction. So there might be a clash because IGST is fungible. It can be used for discharging the liability with reference to SGST, but the SGST that is available for him in one state cannot be used for discharging the tax liabilities either for CGST liability or SGST liability in a different state where he has registered himself. So these are some of the problems that he might be facing. But earlier, in the service tax regime, prior to introduction of GST, we had this concept of centralized registration, where a person takes single registration, manages everything from that point, and then he manages the compliance obligations of the legislation from that particular point. Whereas here, it has been made very clear under section 24 that when a business entity has got footprints in more than one state, then he has to compulsorily register himself in each state where he has business footprints. So this has created a little bit of difficulty with reference to maintaining his accounts, and also to some extent the availability of already restricted or blocked input tax credit with reference to works contract. But let us analyze and see what section 22, which speaks about this registration, actually says, whether I have to take registration in each state, or whether it is enough if I take registration in one state and render the service in another state. The specific provisions of section 22 actually states that from where the taxable services are made, and it doesn't say that in the state where the taxable services are made. So it says that from where the taxable service supplies are made, which means his principal place of business, if he registers there, it is enough. It is not required for him to register in each and every state where the taxable supply is made. That is not the wording that is available in the section 22. It is very clear that if he is able to manage everything from one particular point, one registration is enough. But practically, he will find it difficult. As I said, that there is a clash of input tax credit with reference to SGST, and there is also difficulty with reference to maintaining the accounts, because in case of works contract, site-wise accounts should be maintained. So all these difficulties will have to be overcome. So practical suggestion that is given by most of the experts who advise their clients here is that register in all states where taxable supplies are made, especially where in the sites where goods and services are received, so that even those input tax credit which does not be blocked in terms of 17.5, at least it must be available for them to utilize for discharging their final tax liability. So single registration at the fixed place of establishment in a particular state is enough in terms of section 22, but practically it is always better to take a registration in each state where the works contract service is actually provided, because it is with reference to an immovable property, and the location of the immovable property is the place of supply. So site offices, it can be done, and there will not be any difficulty in passing on the input tax credit from one principal place of business in one particular state to another state also, because this ITC between two distinct persons is allowed in terms of section 25, and in fact the invoice value is considered as open market value as long as he is eligible for ITC. So all these things in fact will solve his problem. So the practical suggestion that is generally given by the experts in this field is that it is always better to register in all states where the taxable supplies are made. And let me reiterate, though the registration at the fixed place of establishment is enough. So this is just a advisory that can be given, but the law does not expect you to register in each and every place where this immovable property is located. And the next very good advantage with reference to works contract is that no, this works contract, though it is a service, the composition levy scheme is available for works contract. So composition scheme, which was not available for works contract, it was in fact not available for services per se, and it was not available for works contract also. But from April 2019, for all those taxpayers whose taxable supply of services is less than 50 lakh rupees, they are eligible for this composition levy scheme. So they need it was a big blow earlier. No, the non-availability of composition levy scheme was a big blow for small contractors, but now this scheme has been extended to service providers and they get benefited. What are the benefits available for small contractors? Reduced tax liability, simplified compliances, and they have limited documentation. They need not issue taxable invoice, bill of supply is enough. Then ease of operation, like no, they need not file the returns on a monthly basis. It can be a quarterly statement declaring their tax liabilities in CMP 08. And then no cash flow advantage will be there because of the reduced tax liability. And no, these compliance obligations will in fact reduce the cost of providing the service and they gain a competitive edge. So therefore, this composition levy scheme is applicable to works contract. In fact, it has come as a boon for small and medium suppliers of this works contract service. Works contract and ITC, again, it is a very, very important subject because, no, as I said, there are certain moratorium that are imposed in terms of subsection 5 of section 17, which are called as blocked credits. So ITC is eligible for a person who is providing works contract services only if the works contract is an input service for further supply of works contract, like a builder or a promoter. And it should be used for construction, and construction includes reconstruction, renovation, etc., etc. But if it is not with reference to any further supply of another works contract services, then he is not eligible for taking input tax credit. I would like to know, like, explain this with an example in the subsequent slide. And this immovable property includes plant and machinery also. So that is one line of confirmation which I wanted to give. It is always generally considered that an immovable property is one which, when attempted to move, gets distracted or gets destroyed in the process of movement. So that is how the definition of immovable property has been given by the Supreme Court in the case of Sirpur Paper Mills case. But plant and machinery are also treated as eligible for input tax credit as far as works contract is concerned. So it has to be, point number one, it has to be used in the furtherance of providing a works contract services, or maybe with reference to plant or machinery. Otherwise, input tax credit is prohibited in terms of section 17(5) of the CGST Act as a blocked credit. I'll just try to give you a scenario where you will be able to understand this concept in a better manner. Like, let us assume that a company A is a software company and he has engaged a company B, which is a works contractor, and company B in fact has engaged a subcontractor. So let us understand that this is how the workflow process with reference to this works contract actually happens. So this subcontractor undertakes a company construction activity on behalf of the works contractor company B for the software company A. So this is the activity that is undertaken. So this subcontractor C will in fact pay GST as works contract service at the rate of 12%. He will raise an invoice on the original works contractor B. So because works contractor B is also a works contractor who is providing a works contract service to the software company, whatever is the tax that C pays on works contract service becomes an eligible credit for B. However, B is providing the same works contract service to A, but A is not in the same line of business because he is not a works contractor, he is a software company, and therefore whatever is the tax that is paid as works contract by B will not be eligible for A because it's a blocked credit. At the same time, if this works contractor B instead of providing a works contract service to A, offers a maintenance or repair service to the software company B. It means that it is neither a works contract service nor a construction service, and therefore whatever is the amount C pays to B, or C actually charges to B, B does not become eligible for that, because no, it is not in the same line of business of providing works contract. So he is not eligible for that. Even in situations where no B procures goods or services on his own account for construction other than plant and machinery, still he is not eligible, because he is not in the same line of works contract. So that is how no, you will have to understand how the ITC mechanism actually works with reference to works contract. Time and supply of again, that is another aspect which one will have to very clearly understand, because most of the works contract services are continuous supply of services, and whenever being a supply of service, receipt of advance is the time of supply. So let us be very clear on that. And when it is a continuous service, there are three situations which will trigger the tax liability even if the services are not completed. First, payment due date available in the works contract, whether the amount that is liable to be paid on completion of the event is paid or not. If there is a due date for payment in a continuous supply of service, that becomes the time of supply. Or payment due date not available in the contract, then based on the event, this tax liability will have to be discharged at that particular time. Between them, the earliest will be the time at which it has to be discharged. So two things which will have to be understood here is, as far as time of supply is concerned, it is a supply of services. Receipt of advance will definitely trigger the liability immediately on recognition of the receipt of advance or issuance of invoice, or generally, as if it is a continuous supply of services, it is the payment due date available in the contract, whether paid or not, that will trigger the liability. So this is again very interesting time of supply with reference to works contract. Valuation of works contract also has a very unique substitution here, in a sense that the value of supply, which involves both supply of goods and supply of services, and especially with reference to the immovable property like construction of a building, then the total amount, the transaction value involved here is the total amount paid for such services minus the market value of the land share or an undivided portion of the land. In terms of explanation 2 of notification 11 of 2017, which substituted the original rate notification, a notional exemption has been given, with especially with reference to the land value. It says that the cost of the land or 33% notional value will have to be adopted, but in no case the land value should be more than the 33% of the notional value. If the land value is more than 33% of the notional value, then we will have to take the notional value into consideration, deduct that, and then arrive at the transaction value for the purpose of paying tax on works contract services. So 67%, 33% has been allocated for notional value attributable to the immovable property of the land. So this is how the transaction value with reference to works contract actually works. There are so many services that are associated with works contract services, like being a construction sector which avails a lot of works contract services. Directly in relation to immovable properties, we have so many other professional sectors that come into place, like architects or interior decorators or surveyors, engineers, and other related experts. Then estate agents, grant of rights to immovable property, or those who manage or coordinate with construction work. In all these situations, in order to determine whether CGST plus SGST has to be paid or IGST has to be paid, the place of supply becomes very significant. And in all these 8 situations, the place of supply is the location of the recipient. So that will decide whether this is an intrastate transaction or an interstate transaction. And there could be a situation where the same architect might be providing supply of services to more than one location, located in more than one state or in one union territory. So in that situation, the The value of services shall be separately identified in proportion to the value, in proportion to the value of the total property. So that is how the value with reference to the architects or the other persons will have to be identified. But the bottom line that one will have to understand here is with reference to place of supply, and in all such situations, the place of supply is the location of the recipient, wherever the recipient is located. What are the documents that are required to be maintained by the person who is undertaking works contract? So Rule 5614 specifically gives five very, very important documents to be maintained, and this is exclusively for the person who is executing works contract. It says that the name and address of the person on whose behalf the works contract is executed, so that will have to be very clearly maintained. Description, value, and quantity of goods and services received for execution of works contract. Description, value, and quantity of the goods received, utilized in the execution of works contract. Details of the payment received in respect of each works contract, because this triggers the time of supply, and name and address of the suppliers from whom he has received goods and services. So these five information with reference to each and every individual site will have to be maintained. And because of these compliance obligations that are prescribed under the legislation, it is generally suggested that no separate registrations in each for each site is always preferable. What are the exemptions that are available with reference to works contract? So whenever there is a recognition of a pure labor contract, then it is exempted, because the pure labor contract, the principal supplier and the actual recipient will exchange the tax liabilities, whereas this pure agent or a pure labor contract will not be liable for paying this GST, because he acts as a pure agent, and we have a recognized understanding about pure agents with reference to this GST law. So whenever the transaction between a supplier and a recipient of supply happens through a pure agent as a pure labor contract, then the activities of a pure labor contract will not attract GST, whereas the original supplier and the actual recipient will have to bear those tax compliance obligations. So this person is exempted, but there has to be a very specific recognition of this pure agent concept, pure labor contract concept, both by the supplier of service as well as the recipient of service. There is also one more obligation with reference to these works contract services, that is no TDS provisions, that is tax deduction at source. In terms of section 51 of the CGST Act, there is an obligation to deduct tax whenever these works contract services are made by a service provider to government, departments, board, society, or special establishment, local authorities, or public sector undertakings. Let me clarify one very important point here. This tax deduction at source is not specific to the works contract alone. Any supply of goods or supply of services, whenever the contract of the supply of goods or supply of services exceeds 2.5 lakhs in one contract, excluding the GST amount, then TDS will have to be deducted. Works contract is also one of those services. Whenever it is provided to these specified organizations, the TDS will be deducted by such organizations on the date of payment or credit, whichever is earlier. The percentage of TDS will be at the rate of 2%. That is 1% CGST and 1% SGST. And the person who deducts this TDS also has got an obligation to file a return called GSTR7. Whatever amount is deducted as 2%, once this GSTR7 is filed before 10th of the following month, the amount that is deducted as TDS will in fact be made available to the supplier of service or supplier of goods, and he can utilize that for discharging his final tax liability. So this is the system that is involved, and this is how the workflow actually goes. You can see here that the taxpayer actually deducts tax from the total payment that is due for the supplier of services. Then the taxpayer in fact deposits the same to the credit of the government, and after that it goes as a credit through the TDS returns to the supplier of services. And earlier we had this a certificate to be issued, a certificate under GSTR 7A. a certificate of deduction of TDS was mandated to be issued, but now no, that system has been withdrawn, or it is not required. And once this TDS return is filed, GSTR 7 is filed, the payee actually automatically gives this amount to the supplier of service, and he can utilize it for his future liability. So before the supplier of services is actually obliged to pay his tax liability with reference to such supplies, this 2% which was deducted as TDS will be available for him as credit, which can be used subsequently, because this return is expected to be filed by 10th of the following month of provision of service, whereas for the same supply of services, the supplier will be filing the return only on 20th. Therefore, he has 10 days time to take it as credit and then use it for discharging his future tax liability. So this is with reference to this works contract. As far as the real estate sector is concerned, generally, we end up seeing two very important acronyms. One is REP and the other one is RREP. So these are the two very important acronyms that are actually used. So let me explain to you what is this REP and what is this RREP. REP is a real estate project which is purely residential. You don't have any commercial activity or commercial interest with reference to that. Whereas a residential real estate project means a real estate project in which the carpet area of the commercial apartments is not more than 15% of the total carpet area. So which means this is a standalone purely residential apartment, that is a real estate project. Whereas this residential real estate project will have not more than 15% of the carpet area attributable to commercial apartments, and balance 85 will be residential apartments. So it is only the upper limit which has been fixed as 15%. It can be even 5%, right? So, but it cannot be more than 15%. So that is what is called as a residential real estate project. If it is more than 15%, it becomes a commercial real estate project. So that is how the distinction has been made. Three type of real estate projects. One is real estate project where it's only residential real estate project where residential and maximum 15% commercial activity can be there, or if it is more than 15%, it becomes a commercial real estate property, right? Leviability of tax with reference to this real estate project, in fact, can be divided into two ages, in a sense that it can be put into two silos. One was between July 2017 to March 2019, immediately at the time of introduction of GST. These were actually prevailing. That was touted to be called as an old scheme. Subsequently, a new scheme was introduced from 1st of April 2019, and that was called as new scheme. And it came into effect for all the projects that were built or the projects that are commenced after 1st of April 2019. So those projects which were commenced after 1st of April 2019 will have to mandatorily follow the new scheme, or which is also called as a current scheme. And all those projects which began prior to 1st of April 2019 and got completed before 31st March 2019, they had the old taxable rates. But those projects which began before 1st of April 2019, but which could not be completed on 1st of April 2019, but continuous activity was going, it was called ongoing projects. And for all such ongoing projects, which overlapped between the old scheme and the new scheme, the builder had the option to choose whether he wants to go for the old rate or for the new scheme. This option is not available for all those projects which commenced after 1st of April 2019. So these are the two timelines that are associated as far as this construction services are concerned. Now let us see the new rate under the new scheme. I was actually talking to you about this affordable housing and non-affordable housing. So it is not the question whether I can afford this house or not. The notification defines what is an affordable housing and what is a non-affordable housing. And these rates came into effect from 1st of April 2019. So let me first of all see what is this affordable housing. And whenever no a person wants to avail the benefit of either 1% or 5% under this new rates, he is not eligible for input tax credit. So that is a common link between both 5% and as well as 1%. Whereas when it is treated as an affordable housing, the rate of tax is only 1%, 1% of the total value. And affordable housing are those in metro areas, if the total carpet area of the total real estate or of the total house residential unit is up to 60 square meters, plus if the value of that house is up to 45 lakhs in a metro area, it is treated as an affordable housing. If it is a non-metro area, then this area of the individual residential dwelling can be up to 90 square meters, but the value actually remains the same as 45 lakhs. Then it becomes again an affordable housing. So here the distinction is between whether it is in the metro area or in the non-metro area. So now we need to know which is the metro area and which is a non-metro area. So that also has been in fact defined. So in the notification itself, they have clearly said which are all the metro areas and which are all the non-metro areas, like Bengaluru, Chennai, Delhi, or Hyderabad, Kolkata, Mumbai, etc. are all treated as metro areas, and other places are treated as non-metro areas. So based on the classification of the city, the rate of tax also, classification of the city, the question of whether it is an affordable housing with 90 square meters area or 60 square meters area will decide what is the rate of tax, which is actually 1%. A non-affordable housing, if he fails in any of these conditions, if somebody fails, then it becomes a non-affordable housing, and in such cases the rate of tax shall be 5%. Of course, in this case also, as I said, the common link between these two is that no ITC is available. So this in general is the understanding that we should have as far as the construction industry is concerned. So if it is a housing sector, and if it is a non-affordable housing sector, and if a person wants to avail input tax credit on that, then this 1% and 5% will not apply. Then the general rate of construction services at the rate of 18% will apply on him. So these are the three rates of taxes that one will have to understand as far as the construction of a residential area is concerned. And if it is a commercial area, if it is a commercial construction, all these things will not work. It will be straight away only 18% on the commercial construction. So this is how one will have to understand. And there could be a transfer of development rights by the landlord to the promoter also. So it can be a transfer of development rights. It can be a joint development agreement, or it can be an FSI related aspect, or long-term lease premium can also be received. In all these cases, two scenarios will come. If it is a fully built and it becomes an immovable property, and if the GST is payable on the houses before it became immovable property, then it is exempt from GST. But if it is exempt from GST, it becomes taxable. So it is complementary. So one will have to see whether the transfer of development rights happens before it became a movable property, before it became an immovable property or not. So this is how this construction industry will have to be considered. So three important aspects with reference to this slide is that the rate of tax is 1% for affordable housing without ITC, and it depends on the area in the metro area or in the non-metro area. Otherwise, it is classified as a non-affordable housing, and the rate of tax attracted is 5% without GST. And in case it doesn't fit in either of these two categories, the GST rate on construction service in general is 18%. And there will be a question of transfer of development rights also. In that situation, there are two scenarios, whether it is exempt from GST or not. If it is exempt from GST, it is exempted. If GST is payable, it is taxable. If GST is not payable or exempted. So this is how the entire understanding about the rate of tax with reference to housing will have to be understood. There are also three more very important conditions, wide notification 3 of 2019, which prescribed this 1% and 5% for affordable and non-affordable housing. The output tax liability in such cases, that is 1% or 5%, shall be discharged only through cash ledger. So that is one more condition for availing this benefit of this scheme. Input tax credit, obviously, as I already told you, input tax credit is not eligible for them. They cannot take input tax credit, irrespective or notwithstanding the provisions of blocked credit under 17(5). And there is also a reverse charge mechanism liability that is cast on these people who have availed the benefit of this notification. I will explain that in the subsequent slide. So this reverse charge mechanism, what happens is, like, I don't have the ITC benefit, and therefore I tend to go and purchase the goods from an unregistered person. The reason for seeking this supplies from an unregistered person is that I need not bear the incidence of the GST from him. If he is a registered person, whatever supplies that I get from him becomes taxable, and I become the person to bear the incidence of this tax. Whereas if I go and get it from an unregistered person, there is no necessity for me to bear the incidence of this tax. But the government has invoked the provisions of section 9(4), wherein a specified registered person like this builder or a developer shall pay on reverse charge mechanism whenever he purchases certain notified goods or services, both goods or services from an unregistered person. So what are those categories? Like, if it is a cement will have to be purchased only from registered person. So if he purchases from an unregistered person, then he will have to pay 28% on the total cement that is purchased under the reverse charge mechanism. And once he pays that, it will be treated as purchase from a registered person. Similarly, capital goods also attracts reverse charge mechanism at the GST rates that is applicable for the respective capital goods. Cement 28% we know, but capital goods, it depends on the goods that we are procuring. It might be either 18% or 12%, or in some cases 28% also. And it has also laid a condition that in a financial year, the purchases from unregistered person cannot be more than 20%. And if it is more than that, the difference will have to be liability will have to be discharged at the rate of 18% on the difference, except cement, because cement attracts 28%. Though I have tried to explain this, it will be more easy for us to understand when we go through a small calculation of sorts. Here I've just tried to tabulate a calculation to show you explicitly, how much that he falls short. The aggregate of a registered person, if you can see, progressively cumulative purchases from a registered person over this financial year actually stops with 76%, right? So it has to be 80%. So that is what we saw in the notification, which I explained earlier. So there is a shortage of about 4% on the total value of the purchases. So 25 lakhs is the total expenses, in which he fails by 4%. And therefore, for this 25 lakhs, this 4% will have to be worked out on this. It is 1 lakh rupees, and this 1 lakh rupees attracts 18%, and he will have to pay 18,000 rupees on reverse charge mechanism. So this is how the calculation will have to be undertaken, to the extent where the aggregate of registered purchases falls short of 80%, which is prescribed. So this is one of the very important obligations under reverse charge mechanism that has been laid on those developers for construction of residential real estate project. They also have monthly and yearly compliances with reference to this. They have to maintain project-wise details. So this is very important. Project-wise details is required. It cannot be aggregated for overall projects. It has to be project-wise. And reverse charge mechanism on cement, whenever it is purchased from an unregistered person, will have to be discharged in the same month. So ITC that is not available will have to be shown in the respective column in GSTR 3B. And this 1/3 value, which is attributable to the value of the land in the total comprehensive contract, should also be reported in GSTR 1 and GSTR 3B. And rule 42 and 43, the reversal to be done project wise. So that is why it is always better to maintain the accounts project wise, so that we don't end up in any difficulty. Whereas this, what I said, no, the percentage that falls short of 80% can be calculated for a particular financial year. Whereas with reference to cement and capital goods, it has to be discharged in the respective tax periods. There is also a concept in the real estate industry called joint development agreement. The landowner gives development rights to the builder. The builder in turn provides construction services, monetary consideration to the landowner for having received the development rights. In this situation, the promoter who has received this development right or the floor space index FSI or long-term lease should discharge the GST on reverse charge mechanism. Here, the supplier of service by providing the development rights is the landowner. The recipient of this service is the developer, but still, as a recipient of service, it is the developer who will have to pay this GST on this development rights. In the joint development agreement, the rate of GST on this is 18%. This development rights consideration will not include any upfront amount, premium or salami, etc., which are all exempted. But no, the annual or monthly rent fee that is liable for GST will have to be paid by the provider of service. So that is also one aspect which will have to be seen, but there is a clear distinction between what I am saying here and what is being collected here. So taxability of construction service to landowner. 4 things are very important. What is the time of supply? So the time of supply, is not later than the time of the completion certificate or the first occupancy, whichever is earlier. Before that, it is treated as supply of service. If the completion certificate is obtained or if the first occupancy happens, it becomes an immovable property and therefore GST will not come into play. And rate of tax, as I said, no, it shall be either 1% or 5% here, though I have mentioned it as 1.5 and 7.5. I have factored in the 1/3 that is attributable to the land value, and therefore, no, we have always been saying it as 1% and 5%, but the notification says it is 1.5% and 7.5%. Net of the 33% of the land value, it becomes 1 and 5%. Otherwise, no, for other constructions like non-affordable or commercial constructions, it actually is 18%. In fact, no, during the course of the initial speech also, the first speaker was very candid in expressing that 18% in construction industry is very high and therefore requires a revision. And probably I think it would be appropriate if he knocks the right door and gets relief from 18%. Input tax credit shall be available to the landowner subject to certain conditions, but generally, the landowner may not be a registered person and therefore no ITC benefit to the landowner may not be that much beneficial. What is the implication of sale of plot or land? Obviously, land is an immovable property. There is no GST on sale of land. GST is not leviable on sale of land. But one aspect which we will have to very categorically understand is that if a builder completely develops his share of plots and sells it to an end-use customer, then whatever is the cost that is involved in development of this land will become a consideration, and for that 18% GST is leviable, whereas the value attributable to the sale of land is not liable for GST. So sale of developed plots will not attract GST on the developed consideration attributable to the plots, whereas the consideration with reference to the expenses incurred in development of this plot, it becomes a service. GST is there on development charges, and here there is no concept of completion certificate, etc., because it is only land. But services attributable to sale of developed products is liable for GST. So that is how we will have to understand. Right. So what we have done in a nutshell today is now we try to understand what this works contract service is, what were the difficulties that were there in the Legacy Act, and what is the solution that has been given post GST. Then difficulties with reference to registration process, how it can be solved, and then the workflow with reference to works contract, what are the various rates of taxes that are associated with works contract, and how input tax credit affects works contract, especially with reference to 17.5 and the real estate sector, and and certain discussions with reference to I gave you a little bit of an example or an illustration in areas which I found that it might be a little complex to understand when you read the legislation. So those aspects also were there. And there are certain resources available with reference to this works contract as well as real estate sector. I have given the official source of all these information, that is CBIC's official web page, which I have given here at the bottom. Probably no one can go and look into this for further information. The CBIC has brought a flyer with reference to construction industry and works contract. We also brought a detailed FAQ with reference to works contract. In fact, a very specific FAQ and a clarification has been given after an introduction of the new scheme of 1% and 5% for affordable and non-affordable housing from 1st of April 2019. A plain reading of that FAQ will also help us to understand how the leviability of GST on this construction industry and works contract actually works. So with this, let me conclude my presentation here. I've tried to cover most of the important aspects with reference to the works contract, and hopefully, it would have brought a little bit of wisdom on these aspects. So I close this presentation. I once again take this opportunity to thank the Principal Additional Director General, the Directorate of Taxpayer Services, Mumbai, for having provided me this opportunity to make this presentation, and also my Additional Director General and my team Nason here, who have in fact helped me in creating this content and making it a little visually presentable probably. Now I will take the questions that are available in chat box. To as far as possible, I will try to answer these questions. And let me give a caveat here. Those questions which are not relatable to works contract or construction services, I will refrain from taking those questions. And some questions which requires a policy level decision, that also I will not be able to answer. So I think the participants should excuse me for that, because I'm not the right person to give explanation for the policy decisions. So this is how the works contract and real estate sector in fact actually works. So thank you once again. Over to you, sir, please.
Thank you, Srivastav-ji, for the elaborate and excellent presentation enlightening us about the essential aspects of works contract and GST. As you have mentioned, now we move to the question and answer session. I see quite a few questions in the chat box, and I request you to go through them one by one. Looks like there are a few repetitions as well. And as you said, whatever is outside the purview of the topic or outside the purview of how much we can answer in terms of going to the policy, I think we can exclude that. And as you've mentioned, the others can be addressed one by one.
Okay, so, right, sir. First of all, let me take the question by Mr. Ashish, who says at times government department allots works contract to GSTN whose registration is already cancelled. For such cases, 2% TDS deducted by the government department cannot be claimed in cash ledger by the GSTN. Can such 2% TDS be demanded from government departments with SCN or otherwise? See, first of all, the question of deducting this TDS under section 51 is applicable only for the registered persons. So if a person's registration has been cancelled either on his own volition or probably because of he has not filed his registration, this 2% in the first place need not be deducted at all. But still, if it has already been deducted, it should have been brought to the notice of the respective government department so that they refrain from deducting this 2%. So a person who has given a GSTN number, but subsequently which has been cancelled, there is no relief for that if it has already been deducted. So the best part of it is that you should revoke the cancelled registration and then claim this 2% in the electronic cash ledger, and then probably use it for your subsequent discharge of the liabilities.
Excuse me.
Second question is by Mr. Lalit. Explain the term first occupancy. it should be after completion certificate of the very unit or without that. What has been explained is the first occupancy in situations where the completion certificate has not been received, but still from among the apartments or the dwelling units, if at least one is certified as having occupied, then the completion certificate will not play the predominant role. The first occupancy actually will play the predominant role. First occupancy actually means when the electricity connection is given, water connection is given, and that property is assessed for property tax. So if that has happened, then probably we can take it as first occupancy. Otherwise, no completion certificate actually predominates. Can you elaborate the definition of immovable property? Is installation of lifts, doors, wooden tiles is covered under immovable property? Immovable property is one, so it is not the definition that I am giving. It has been very clearly elaborated in a very landmark judgment with reference to Sirpur Paper Mills versus the Union of India, where they have said what is an immovable property. They have said that any property that is capable of movement without causing substantial destruction itself is a movable property. All others are immovable property. That is how the Supreme Court has decided what is an immovable property. Lifts can be covered under plant and machinery. Probably it gets covered under that definition, whereas doors and wooden tiles will not be covered under immovable properties because they become consumables. Is refund allowable in inverted UG structure in case of works contract? Answer is no. Can you explain the term fixed to earth? Yes, fixed to earth used in case of transfer of immovable property. To what extent? Yes, I think no, that is specifically why there are certain situations where we may fix the plant and machinery to earth permanently also, but they are capable of movement whenever they are required without causing substantial destruction to itself. When a particular plant or machinery, you can remove it and then shift it from one place to another place. Still, they are treated as immovable property as far as works contract and the provisions of 17(5) are concerned. Otherwise, the bottom line as per the Supreme Court judgment is whenever you attempt to move a property from move a particular goods from one place to another place, it should not cause substantial destruction to itself. It should be capable of being installed elsewhere in its original form. If that happens, then it becomes movable property. Otherwise, it is an immovable property. Can you explain? Okay, that I have already done. What is the ceiling limit for an affordable housing project and how it is calculated? What are the inclusions and exclusions? It is generally the total project value which has to be covered. As I said, in both metros and non-metros areas, it is 45 lakhs that has been fixed. That is the contractual obligation. And in a metro area, the total area allowed is 60 square meters, whereas in a non-metro area, it is 90 square meters. Kindly share the PPT. Yes, I will share it with our colleagues at DGTS so that it can be sent to whoever is interested in having this in PPT. Probably if you can give the email IDs to the respective officers, that they will. I hope it will be helpful for them to distribute this. Since works contract comes under service, does it mean that 50 lakh compensation scheme extended to all service providers? Yes, see, it was not specifically extended to works contract. It was extended to all supply of services. So that is why I said that after introduction of composition levy scheme to supplier of services whose annual aggregate turnover with reference to supply of services has not exceeded 50 lakh rupees in the preceding financial year, get the benefit of composition levy scheme, and works contract is no exception to that. When shall be the time of supply be considered, and when shall GST be attracted and on which value? In case contract work was fully completed by the contractor on a date, but the bill is not being issued, and the payment is issued by the contractee in the next period in 12/10 equal installments. I think though the question is little abstract here, what I understand from this is that being a continuous service, I think the payment will be made in installment basis, not necessarily in one go. But there could be in the contract one of the clauses which says that once I reach this particular point in this continuous service, there is a liability to pay tax. For instance, let us take the example of constructing a residential apartment where in terms of the agreement between the purchaser and the builder, the contractual obligation is that out of the total consideration, 10% will have to be paid after the foundation is over. Then 20% has to be paid after the roofing is over. Then maybe another 40% should be given after laying of tiles. So there are so many stages in this entire process. And upon completion of each stage, as per the contractual obligation, the buyer is liable to pay the contractor certain percentage of the total contracted amount, whether paid or not. If there is an agreement like that, the date on which this particular event happens, and therefore the liability is created for payment by the buyer to the constructor, that becomes the time of supply, and it has to be discharged within that tax period. So that is how now we will have to understand. And this is not very specific to works contract. This is the general rule of thumb that is applicable with reference to supply of services, and especially continuous supply of services, because no receipt of advance is the time of supply with reference to supply of services, which is not the case as far as supply of goods are concerned. Whether development projects are subjected to GST and charged to the original tenants. I'm sorry, sir, I'm not able to understand this question. Redevelopment project in general is also subjected to GST, but no, we will have to see what are the conditions and what are the contractual obligations entered between the old owners and probably the developer and the new owner. So that will decide which are the legs that are liable for GST and which are not coming under GST. So for this final question by Mr. Ashok, only scrutiny of the contractual obligations between the three stakeholders will decide what is liable for GST and what is not liable for GST. Yes, sir, I think I have completed all the questions. If there are any more questions, I will wait to answer them, sir.
Looks like that will be all.
I think, Joseph, we can conclude now.
Yes, sir. Yes, sir. Thank you, Shri Srivatsanji. And as we come to the end of the webinar session, I would like to request Shri Sanjay Kumar, Assistant Director, DGTS Mumbai, to extend a vote of thanks.
Thank you, sir. Thank you. Good afternoon, everyone. After the successful session on the topic, important features of works contract in GST, it's time for a vote of thanks. On behalf of DGTS Mumbai Zonal Unit, I extend my sincere thanks to Sri Sanjay Rathi, sir, Principal ADG, GTS Mumbai Zonal Unit. Sir has always been very supportive and a guiding force in webinars. Thank you, sir. Thank you so much. My heartfelt thanks to both our trade panelists, Sri Kishore B. Rathi ji, past President and Head of Indirect Tax, MASIA, that is the Marathwada Association of Small Scale Industry and Agriculture, and Sri Jimmy Malaikar ji, Vice President, CAMIT, that is Chamber of Associations of Maharashtra Industry and Trade. Thank you, sirs, for participating and presenting your viewpoints on the topic. And last but not the least, my special thanks to our esteemed speaker, Sri R. Srivatsanji, Assistant Director, NASIM Chennai, for delivering such an elaborate and insightful presentation on the topic. Thanks a lot, sir. Thank you so much. I would also like to thank Sri Joseph Goda Patil, sir, Joint Director, DGTS Mumbai Zonal Unit, and the entire DGTS team for conducting this webinar. Thank you all. Now, with the kind permission of ADG, sir, I would like to bring this session to an end. Thank you. Thank you all.
Thank you.
Thank you, sir.